right, testing, testing. All right, guys, good evening. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for joining me today. It is 5 p.m. Eastern Standard Time, time for our aftermarket recap. Before we begin, bottom right-hand corner of your screen, the little white logo, click on that. Turn on notifications, subscribe to our channel. We're trying to get to 10,000 subscribers, where I think we're already at 8,200. Amazing, amazing. So if you know of anyone who would like these videos, make sure to share it. Any kind of questions you may have, just leave a comment here on the live chat, the chat box on your computer or your phone, and you can always leave us a question or comment on our comments section after the video is done. I do the YouTube myself. As you know, it's not very fancy. It's really just a screen. It's really just information, guys. You're not going to get a ton of bells and whistles at the end of the day. So let's go ahead and talk about it. Dow closed today up 560 points, up 1.6%. The Nasdaq gained 2.4% today, the big winner. S&P gained 1.78% at 46.49 on the S&P spot price. The VIX closed down 8.13% at 21.01 today. Small caps really rallied today. IWM 2.86%. We have calls, the 218 calls for tomorrow. We're in those, we're green. The dollar fell today, 96.45, pretty marginally. The yields, interesting enough, yields, we talked about this morning. It's almost like yields and Bitcoin are going lockstep, up 4.79% in terms of the 10-year yield. 1.487% is the 10-year bond right now. Gold down 0.04% on GLD, 167.02, and silver up 0.97%. 2077 an ounce on this SLV. That's not an ounce, excuse me, that's 2077. Let's take a look at the credit markets. High yield credit gain today. That's more of a confirmation of a risk-off move, up 0.53%. That means that high yield bonds are being bought. Again, these are like B's, triple B's, C's, if you remember the Big Short. Again, the smaller aggressive companies like a Blink, Upstart, those names are going to borrow from the high yield credit market. Just due to like assets and due to credit ratings. The highest one, LQD, that's investment grade. That's Apple, Microsoft, J&J, those kind of names. They're going to get the investment grade in terms of pricing it of their bonds when they want to borrow money. So just keep that in mind. Credit is vital to the economy. It provides liquidity. So most recessions usually happen, if not all happen, for one reason alone, is lack of credit. So again, think of the bond market as the credit market. You'll probably hear me interchange that here and there. So again, keep in mind, HYG, LQD, those should be the two credit markets you should always be watching. Taking a look here at crude oil, we'll take a look at the futures contract, 71.27 a barrel, up 3.88%. Silver futures, again, 22.53 an ounce, and gold per ounce, 17.89. Remember, we keep talking about that 1800 level, that it's always been flirting with it, doesn't really stay above it that long. It's just been a tough road for gold investors, but keep in mind, if you're owning precious metals like gold and silver, more likely you're doing wealth preservation. You're not really looking for growth. You're just looking for something that's gonna, when times get a little wild, when you have massive inflation, then gold and silver are gonna be more of your friend in that term. Sure, we have inflation, but gold is not keeping up with that pace in terms of being an inflation hedge. Gold, in a sense, has now become, in a way, just a preservation. It's probably pretty much as good as cash in a sense. Obviously, gold isn't as liquid as cash, but you can get what I'm talking about. Even in a recession, bond prices do fall, yields go up. Usually, that's the case without QE in a regular economic sense. So again, I kind of lump gold, silver into that cash position sort of thing. You're not going to get a ton of return. I don't think gold has even outpaced inflation this year in terms of the CPI being at 7% or 6.7 year over year. But at the end of the day, I mean, it's not bad to have a little bit of a slice in your portfolio. I own a couple of gold coins. Maybe I'll do a video one of these days on my gold coin holdings and my precious metal holdings. If you guys want to see that, shoot a comment below. I'll record that on my phone and post it. Ethereum futures 4,024, above that 4,000 level. That is nice to see, up 2.31%. Bitcoin 4.33%. Guess what was up today in terms of comparison? The 10-year yield 4.79%. I'm starting to notice a little bit of a correlation there. Weird, I know. So when bonds sell off, you can see that Bitcoin does take flight. Bond selling off tends to be more of a risk-on sentiment. Bitcoin being and crypto being a big part of that risk on as well. And gasoline futures closed up 2.93% at $2.15 a gallon. Let's go ahead and take a look at FinViz at the groups. Together we'll see what worked, Today, cyclicals led the day. Cyclicals up 3.13%, technology 2.91%, energy gain today 2.76%. We saw with crude oil coming up. Industrials, financials, basic materials, communication services, real estate, all above or at 1.5% at least on the day. Healthcare, utilities, defensives, remember the ones that were doing well during kind of the market dipping, testing that 100-day moving average on the daily. We saw healthcare, utilities, and consumer defensives all lead the way. Speaking of leading, the 1 week relative performance, keep that in mind. The last 5 days running in terms of the sessions. Healthcare leading the way, 2.39%. Real estate, technology, catching a bit up 1%. Obviously today helped. Materials, communication services, and utilities. So even with a bad day in terms of technology, a bad week in a sense, today's rally in tech being up 2.91%, utilities were green the whole time during this fall. The last couple of 4 days, last 3 or 4 days of volatility, Thursday, Friday, Monday, and Tuesday, utilities were leading. Now they're being outpaced by tech. That's the kind of the fight you're having as an investor daily. Do you want safety in terms of just wealth preservation? That's going to be utilities. That's going to be consumer defensive and those and healthcare as well. Or you're looking for some growth. What I always say is that, you know, usually if you're under the age of 35, you should be pretty much heavy in growth because you have a ton of time to make money in your life in terms of your career and what have you. So again, you're always looking for growth. But as you get older, I would say above 50, you usually start looking for preservation. A 55-year-old grandpa, 60-year-old grandpa is probably the best thing not to get into crypto, for example. Maybe if it's a small slice of their speculation part of their portfolio. But you know, grandpa would probably be more into the defensives, utilities, healthcare, real estate sort of thing. He's not going to be in, you know, EV as an example. So there we go in terms of the groups. Let's take a look at the maps here. Again, looking at here the S&P heat map, very nice to see a lot of green. Don't get me wrong. This is a nice day. People are happy again. Don't get me wrong. But again, in terms of stock shopping, not the best. Luckily, I did buy SPY-G yesterday, a good amount of SPY-G shares. Obviously been rewarded today. It's not like I'm going to trade it. I'm keeping it, obviously. But again, we could see the last couple of days, healthcare was leading. Defensives and utilities were the ones that were all green. And the ones that were green yesterday, Broadcom was green yesterday. They're down today. Costco was green yesterday. They're down today. So again, what you're seeing is a rotation, not in terms of sectors, but in terms of risk on and risk off. So again, you know what risk on is. When you're turning the risk on, you want technology, you want cyclicals, you're looking for more growth. And if you're turning risk off, again, utilities, precious metals, that sort of thing, real estate and healthcare are going to be your defensive names. Now, again, not against owning any of these in terms of utilities, defensives, or healthcare. Again, I own some healthcare, I own some consumer defensives. I love them, but again, temper your expectations on what you expect in terms of returns year over year. Yes, again, the more you chase return, guys, the more you chase yield, the more you're sacrificing safety. So again, that's always the great equalizer in the market is, hey, do you want higher returns? Prepare for some volatility. My crypto traders and my crypto investors know exactly what the hell I'm talking about. All right, let's go ahead and take a look here at E-mini futures. I've been tweeting about it all day in regards to what to expect. Again, we have our Fibonacci levels. This is the hourly chart. Hourly candles, 20 days, and you can see here today was beautiful. About 7 consecutive green candles. Very nice to see a nice turnaround Tuesday. You can see the base that we formed right in the middle of the morning overnight on Tuesday to being today, and then we finally broke out of it right around 11 o'clock in the morning. 46.17, 46.20 was my first level on that fib. I was really hoping to close above 46.26 being the 100-day. We broke above the 50. Great to see. Now we get to the 100, and we cleanly broke out of that. I was actually expecting us to maybe retest. We got to the 3 o'clock hour, maybe possibly some profit taking by traders. But no, you can see now we cleared above that 100, and now we're looking at 46.47. If 46.47 does break, then I would start taking a look at going long for next week. Santa rally may be in effect. 46.73 is your next resistance up. After that, it's 4,700, a big level for the S&P if we can get there. So again, I wouldn't do anything here in terms of a futures trader, maybe adding positions or starting a new one yet. Again, on a green day, yes, historically speaking, the next 3 days, today included, is the strongest or most bullish days for the market, historically speaking, since 1947. I posted that tweet out there for you guys. But with that being said, again, it's a nice day, but we're not out of the woods yet. This could be totally a sell the rip. It could definitely be a bull trap. That 200-day right on this red here, this red line is overhanging. Not my favorite to hold in a sense, not my favorite to start a new position. I would like that clean break. 46.48, 46.50 we start breaking. If you're a SPY trader, you want to start taking a look at the 467s, maybe even the 470s for next week. We'll keep that in mind tomorrow morning for the morning note. Let's see if we get some Asian buys for futures, if we get that break. Looking at Nasdaq, again, very similar in a sense. You can see that 200-day overhang right around 16,008. Again, it's kind of running out of gas here. Granted, futures are closed. 4 p.m., you're not going to get a ton of liquidity yet because the U.S. cash session is closed. But in that sense, that 16,008 is key. Once you start getting over that, then you want to get to around 16.2. That'll be another one. But again, I would be okay with going long in terms of Qs. We got Qs today as well. In terms of looking at Nasdaq futures, possibly kind of scalping here 16.2. If that breaks above, then you're starting to run out of a risk reward in a sense, where you're going to get about this quad top. So again, 16.4, that's probably your sell signal where you want to take profits of anything that's been beaten down or a little too much volatility in your portfolio, or you have some QQQ calls, or you have some Nasdaq futures. I would go ahead and take a TP, maybe half position, 16.4. You can use a trailing stop after that in a sense to at 16.3, kind of give yourself a little bit of a buffer in terms of that quad top. If that does happen, fine, at least you locked in some gains if you're a futures trader. But again, here, the RR really starts right around 16,030. When 16,030 does break, then 16.2, you slide up the stop loss, you keep riding it to 16.4. I take a majority, if not half the position off, leave it on the table, take some off the table, and then I would probably put an SL at 16.3. If you got in around 16.1, that'd be a really, really good entry for you guys. That's about 200, 300 points on the Nasdaq, a pretty nice one. Again, if you give yourself some time, remember, these would be March contracts as OPEX was last week. That's just something I was seeing. I think I'll be probably getting into that pretty soon. All right. Hello, GS. Good afternoon, William. Any particular reason you're not a fan of TQQ, especially in bull market? It's just the volatility. It's not meant for everybody. Remember, it's triple leveraged. So again, it's just adding more risk. Again, it's not for everybody. I'm not against TQQ. I've owned it. I made 85%. I sold it way too soon. But again, I got my profit. I'm happy with it. But do I want to invest it long term? I wouldn't, honestly. Let's see the gold. Yeah, okay. Definitely get a video out to you. Again, it's nothing crazy. It's not like I have full kilo bars or anything like that cool. It's just little coins. I like them. It's pretty cool. I mean, I haven't really looked at them much since they've been in the safe, but again, these are the couple levels I'm looking at. We also have IWM calls that are in the money. Looks like 220 is your next level up. I have some Apple calls that are just getting destroyed in terms of premium on Monday. Looking at it now, again, we cross above the 200. If we can get S&P above 46, 47, then Apple definitely has a shot to 175 and above. The question is, does this rally continue going on into Thursday? If it does, again, I think the confirmation for a Santa rally to me is 46.73. 46.73 breaks, I think we're going to get really close to all-time highs by the end of the year, if not at least 4,700. But again, 47.43 being the all-time high, again, hey, we're only 100 points away. Again, you have about 6 sessions to get there. Not exactly awful. Won't be a straight green shot. If it does, I'd be very surprised. That would tell me it's indicative of a short squeeze where just too much pessimism out there in the market right now. A little bit of oversold conditions. If you stretch out the RSI a little bit, I'm not a big fan of RSIs, but again, it got into oversold territory into the short term. I believe it was on the 4-hour chart. I saw that on Twitter, but at the end of the day, what I looked at, and we talked about it yesterday, was that 100-day moving average on the daily, and it was to the T that we bounced right off it. You could see that was your buy level. I bought SPY-G right there. I added quite an amount of shares there, so I'm happy with that buy. DMAs you use, I use the 50, the 100, and the 200. Those are the ones I use every day. I live off those in a sense. It's very great for trading. It's very good for entry levels for investors, especially the 200-day on a daily. That's probably my favorite to use. I know it was a lot I just went over, guys, but I really keep an eye on Nasdaq. Again, let's go ahead and take a look at Qs. If Qs do break above 390, I would take a look at next week's possible 395s. If you want to be a little more conservative and maybe wait for 392, that's fine. But I think right above 390.50, I would probably take a look at those maybe 393s for next week, and just buy yourself some time in that sense. Premiums may be a little juiced in a sense, but again, it'd be something to look at. You can always play something that's a kind of a QQQ equivalent, like a Microsoft or an Apple. Again, they run very low beta. Again, they're the biggest parts of the Qs. So again, that's kind of a QQQ proxy if QQQ is just a little too expensive in terms of your risk range, in terms of the position sizing. So keep that in mind. All right, guys, we'll leave it there. Have a great rest of your night. GARcapitalfx.com is the website, and we'll catch you guys tomorrow for the morning note, 9 a.m. Eastern Standard Time, guys. Have a good one.